which have made new highs. Whoop-de-doo! So it looks great on the way up, but it's abysmal on the way down. And a rising gold price particularly is an indication of a failing currency. You can see I'm wearing my eclipse glasses, and that's what we have to do if we want to believe the garbage that's coming out of Wall Street on every level. But let's just take them off so we can see the truth. And I'm going to put glasses on that help me see much better. And we're talking about the markets and all the new highs that are going on because things must be so good. Make sure you like and subscribe to our channel for all the other content we have for you. But let's just dive right in. And first we're going to take a look at the Dow, the Dow Jones Industrial Average, the NASDAQ, and the S&P 500. All of which have made new highs. Whoop-de-doo! What is that really about? That's really about keeping you blind to what's happening beneath the surface and also about wealth transfer. Why do I say that? I'm going to show you in a second. But market returns remain heavily concentrated with just 10 stocks accounting for 85% of the market gains year to date. Now look, this is called herding, right? So it looks great on the way up, but it's abysmal on the way down. Do you know when that change is going to occur? Kind of hidden from you as well, because markets can stay irrational a lot longer than you can stay solvent. And when that changes, let me tell you, darlings, that changes very quickly. They can stay insolvent until they don't. So who's taking advantage of this? Because we know that this is a wealth transfer mechanism. Bezos, right? Those are one of those stocks. Zuckerberg. Those are also one of those stocks. JP Morgan Chase. Those are also one of those stocks. So why not take advantage? This is exactly what the insiders did in 1929 before the credit was pulled from the public and the markets imploded, sending us into a depression. You might say, well, this time is different. I don't think it's different. And it really typically never is. So what are we looking at here? Let's go ahead and just take a look what's happening in the spot markets. And we're going to start with silver because we talked about the run on silver, which is simply escalated. That's a good thing, but it is concluding its cup formation. I bring up the cup formation because it kind of looks like this, right? I mean, nothing is smooth. It bounces and all that, but it'll go up to 48, 50 bucks an ounce, and then it will break out. Then you're really going to see the big run. I don't know, did it capture it? I'm not really sure, but then you'll see a big run because it will have broken out of a long-term trend. But we like this run that's happening right now. What about spot gold? Well, it just had a new breakout. Can you see that at the end? So this is also going much higher, but neither one of these reflect the true fundamental value of a real ounce of silver or a real ounce of gold. This is sound money, and a rising gold price particularly is an indication of a failing currency. So we saw all of those tops and then it was pushed back. Well, now it's going up to new all-time highs, but yet continues to be severely undervalued. Don't stay away from it because you think, oh, it's too high. Oh, it's going to... I never really worry about the spot market. I look at it primarily for you because I'm quite clear on gold's fundamental value. That's the true value for its most important function, which is to hold your purchasing power over time. But We see the stock markets making new high. We see spot gold and spot silver making new highs. Let's look at this relative performance chart. How are they performing against each other? Now, to make it less confusing, I just used the NASDAQ because that's the one that's really running anyway. So we're going to look at the NASDAQ. There it is down there. Spot gold has outperformed it. And this is just the last 200 and some odd days. And then there's spot silver. So clearly spot silver has outperformed them all on a short-term basis, while the stock market is severely overvalued and the physical gold and silver market are severely undervalued. Which one do you really want to be holding? All of those are intangible. I like holding it in my possession because if you don't hold it, you don't own it. And looking for the truth in valuations from Wall Street, might as well put these back on again, because Wall Street's never going to show you the truth. They are just going to set things up so they win and you lose. You want to win? This is what you got to do. You got to put most of your wealth in an undervalued, first of all, take the glasses off. Second of all, hold most of your wealth in an undervalued asset that is in a long-term positive trend that runs zero counterparty risk. It's not that complicated. It's actually super simple. So now Wall Street only knows those trading values, but you know the truth. It's just about trading on every single asset, every single fiat money asset has been, well, physical too, frankly, has been turned into a trading vehicle. It's traders that are determining the prices. You need to have the ability to look underneath the surface and see the truth in valuations, because frankly, that's the only way that you can make an educated choice that puts your best interests first, period.